Hello, Oak here, and this is going to be covering golden backed metals. So, not making that an official idea at this stage. So, the reason I wrote this article, and I've taken taken some time to write it. Unfortunately, writing these articles don't, you know, it's something I do in spare time, so it's not something it can take several days. But and the reason I'm just going to sort of take away it being sort of one of my um, picks for 26 is I've just added a lot of picks very quickly and just kind of going to pause for breath, I guess, is my thinking. So anyway, GPM is golden prospect metals. I probably should add uh, prospect metals to the title. Otherwise, I've had someone uh, email to me and complain that I don't properly describe my articles. That it's very difficult to understand what I'm talking about if I don't put the name, which is fair enough. I can imagine that would be a bit frustrating, having to look up the ticker GPM to work out it was golden prospect metals, and I guess maybe there's a GPM listed overseas, and then there could be some confusion. So anyway, the reason I wrote about this was well, I mean, you can see it's been on a bit of a run, so to speak, but has pulled back. If I zoom in, uh, I actually I don't often manage to catch things just as brilliantly as this, so to speak. But I mean, it dropped down below 70p, and it was at 69.8, and you know, I basically took all my dry powder and bought as much as I could because I couldn't believe my luck, and that's worked well for me. By I think by the end of the day, it's increased, and now today it's sort of at and around 78p. Um, but yeah, I suppose the point about this is that there's always a lagging 24 hours. So the day that I bought it, it was at £1 and 3p, which was the day before's valuation. Today the valuation is 98. So I today when I see that valuation of 98p, I bought it at 69p when it was 98p. Now my calculation was, well, hang on a minute. 69.8. I mean, let's call it 70p. It's zero point 0.2 behind below 70p. So at 70p, buying something that's worth 98p for 70p is pretty good. I mean, that's 28% discount. That's far more discount than it was on throughout 2025. I couldn't believe my luck. But there we go. I added to it, and this video is kind of talking about the reasons why. I'm not recording this video to sort of say, "Oh, look at me, how clever I am." It's just simply, hopefully talking about these ideas is useful for you and I suppose the the idea would be, well, put alerts on the shares, like every share has a price where you'd say, do you know what, like I would absolutely just fill my boots if it was at that price, obviously subject to news flow and different things. And that was the other thing I checked, by the way, was like, well, is it down at 69.8 for a reason? Like, have they just announced, I don't know, something else has happened, or what's caused that? But it was purely that gold was down. So if I just drag good old thingamajig across, and it's bouncing around this evening. I mean, we can see there we go. It's just taken a turn downwards because this gentleman has said he might not lower interest rates in December. Who knows? But I'm pretty relaxed about that because interest rates have been cut today, and the reason that interest rates relate to gold is that um, there's something called the the risk-free rate, and if if interest rates are at 4%, well, you should be able to earn 4% interest. If you can earn 4% interest, well, gold's not going to pay you 4% interest. Gold will just sit there, maybe costing you money because you have to pay to store it, and it doesn't earn. You don't generally earn an income from gold, um, but it protects you from debasement, and that's the reason people hold it. So yeah, if we look at the gold price today, I suppose maybe it was somewhere about here, perhaps. I haven't. Well, yeah, I could sort of probably look it up and say, well, where was it when it hit that low point? Uh, let's have a look. Here we go. So we want to do the 1 week, and it's 1 week. Maybe it was here at about 10 o'clock in the morning, perhaps, that it dropped. Well, it definitely did drop to 69.8 because that's physically what I paid for it. But it says here it dropped to 70.6 according to this. But anyway, that's yeah. So it sort of pretty much mirrored the drop in the price of. I suppose it was here that it dropped. Yeah, so there we go. It was at a low point of the price of gold that the share dropped. And of course, you know, investing in gold miners is a leverage bet on the price of gold. So if gold goes down, well, gold miners should go down by proportionately more. But I think what I've witnessed, I mean, we can see it here on the silver as well, that there's not really, even though there was a technical correction, there's a lot of support. And I'm not any great technical guy, but I've seen that there's not really a lot of momentum behind the drops. The drops have quickly retraced. Retraced here, retraced here, retraced here, retraced here, retraced here. So we are seeing drops, but then we're seeing bounces. So that's probably the extent of my technical analysis for today. But yeah, let's get into this share. I suppose the um, the thing I would say is that this is a growing share where where they are invested into growing miners. So yes, it's a leverage bet on the price of gold and so on, but what you've got to appreciate is that the leverage is large. Okay, so the current price of gold, and I think there was somebody, I can't remember who, that said, here's a meme of like the guy on the 1st of October. Yes, gold's hit 4,000, and it might not have been the 1st of October, but at some point early October, yes, gold's hit 4,000. And then there was another another meme with the same guy, like crying his eyes out on the 20 something else, 28th of October. Oh, gold's hit 4,000, and he's crying his eyes out, even though the price is the same 4,000. So the guy cheering that price a few weeks ago is the guy, tearing his clothes in sorrow 3 weeks later. I mean, have a word with yourself, because of course, it's at the point as it was there. And this is the thing, like, people get very emotional, like, oh, it's no longer going up. Well, okay, maybe it's not. Maybe it's consolidating, it's going to consolidate and go up, or maybe it's going to remain static. Maybe it's going to go down and then stop. Is it going to go back down to uh, $1,800, $1,600? Like, have a word with yourself, because do you really think that? Does anybody think that? Uh, when you see how much buying there is in the market, how much support there is in the market, yeah, I would say I would be very happy to bet against somebody saying, "Oh yes, it's going to go to 1,600." Yeah, I'll do that bet with you, as long as you give me a reasonable timescale. Like next 3 months. If it hits 1,600, I'll give you this. If it doesn't hit 1,600, you give me that. I'd do that bet, because that seems a good bet to me. That the odds are in my favour, because, well, this is what this article is about. It's not me sort of saying, "Oh, look at me, I've bought this at a cheap price. It's basically, why did I buy it at a cheap price? Now, as I say, I I sort of, I mean, and this is sort of the pink is the discount. Sorry, the pink is the NAV of the share. The blue is the share price. So you can sort of see it dropped, as I say, to 28%. I mean, that's a great discount, far more than the discount was here at about 25. So the discount opened up by a lot. I actually cut, I sort of top sliced here. Now, course you did, but I did. Not all of it, just some of it, but I did sell off when it hit zero. I literally said, "Do you know what? Like 103, it was at 103 that I sold, which I think, it was maybe, well, 102, 103. Yes, 102, I say here. I think the top was 103. I sold at 102. So I kind of didn't quite get the top price, but who cares? You know, I was happy with 102 and I said, "Do you know what? I'm just going to take some money off the table, put it into my dry powder." But when it hit down to here, even though the price of gold could have fallen further and still might, I'm quite relaxed. And the reason I'm quite relaxed is because of the calculations I've done. So have I caught it at its nadir? Possibly not. But I feel I've got a margin of safety that it kind of doesn't matter. And that analogy of the two memes of the guy cheering and the guy crying, and the gold price is the same actual number, sums it up. It's like, get a grip, like, just look at it rationally, don't look at it emotionally, because if you look at it emotionally, like, some people are just like, "Oh, sell, the price is going down, sell, 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 sell," and that's the wrong move sometimes. I'm not here to tell you what to do. You make your own investment decisions, but you know keep the emotion out of it is sort of just some wisdom that everyone has to kind of remind themselves about every day, because it's very easy to let the emotions do the buying and the selling, and then you're not making the wise choices. So anyway, um, I just wanted to talk about, why has gold gone up? Why is gold at 4,000? Why has it hit 4,400? So it's a couple of, and I read a lot and I watch, I don't watch telly, but I do watch Bloomberg TV, not extensively because I find quite a lot of it's repetitive after a while, but I'll watch it probably every day. And I mean, I've talked previously about how, the like 6 months ago, 12 months ago, you would have never heard gold being spoken about on Bloomberg. It was like a non-topic. Nobody ever talked about it. Rarely talked about it. Very rare. Uh, whereas like now it's like, I think I tuned in the morning, they were talking about gold, in the lunchtime, talking about gold, in the evening, they were talking about gold, like gold, gold, gold. I was like, you know, like, there's now sort of the general populace, like the wider investment community is starting to get into gold, so is it in bubble territory? Absolutely not. Is it being talked about a lot? Is it getting a lot of coverage? Absolutely yes. But with this pullback, I noticed the narrative very quickly switched to this. There was a couple of narratives going on. There was a narrative about, oh, there's a pullback because slowing momentum and technical signals showing it to be overbought, but also due to progress in the US-China trade talks. Um, Now, I mean, yes, momentum, technical signals, yes, yes, like, you do get to a point where the technical signals say, "Oh, this is overbought." The RSI, and these are just mathematics. Yes, and then you get a reversion, and then the pressure builds the other way. Um, but I think there's a couple of other reasons, and to my mind, this is my rationale of why gold has gone up in price. Very little to do with what's been said on the telly. So if you've kind of got in your head this thing about, oh, it's to do with, the trade talks, well, I just think that's bull. I don't mean a bull market. Um, if that were true, then back on Lib Day, you'd have expected to see a movement in the price of gold, and you didn't. if that were true, when Palestine launched its atrocities on Israel, you would have seen a change in the price of gold, and you didn't. When Iran launched missiles at Israel, and when Israel launched an attack on Iran, you'd have seen a rise and a change in the price of gold. And I mean, I'm not saying there was 000, but it was like, I think when the day that Russia invaded Ukraine, the price of gold changed by 4%. Now, don't tell me that gold is responding to trade talks and political tensions. That's nonsense. Absolute nonsense. Absolute. Do not buy that. Absolutely do not buy that. That's a journalist thinking of a reason to come up with a story, nothing more. Don't think that's based on fact. I think that's garbage. Is my opinion. Now, what I do think is that it was about a year ago, I think, that the West, and I say the West, it was Europe, the EU, the US, basically decided to start expropriating Russian assets. So frozen assets were going to be used to give some money to the Ukraine. Um, the minute that happened, now I'm no fan of Russia, I'm no fan of the Ukraine war, um, but the minute that that happened, I said, well, look, that's wrong. Like the problem that that does is undermine our system, our rule of law, and the rules-based system that's been built up over decades. Yeah. At that point, I'm sure that I wasn't the only one saying that. There was very senior people in China and Russia and the BRICS nations that said, look what's just happened. The Americans and the Europeans have basically done the dirty on Russia. Now, that's not a political thing. I'm just saying undermining the rule of law and the rules-based system undermined the faith in that system, and therefore at that point gold became more important to the BRICS nations, but also to the world. And there's obviously, um, I mean, there's countries like a lot of the some of the countries in Africa now are stockpiling gold. Yeah, it's not just China. China is a big part of it, but it's not just China. Countries throughout the world are stockpiling. Central banks are stockpiling gold. Why? Because of what the West did. Now, that's not a political statement. I'm not saying that to have a dig. I'm just saying that's what caused it, in my opinion. And I think I'm not wrong on that. I think but more than that, it was also the hegemony of the dollar, and if we can replace the dollar with another currency. Now, maybe there was some talk about, the Chinese said, well, we've got a currency called the renminbi, and we could use that. But I reckon the rest of BRICS went, nah, like the Indians wouldn't accept that. Maybe the Russians. I think that it wasn't acceptable to have like the Chinese currency or any other currency as the currency. So then they said, well, what can we do? Well, what about gold? Yeah, like we'll just settle trades in gold, and that's what's going on. The BRICS nations are now de-dollarizing and are trading in gold. So if I give you 1 million barrels of oil, and you give me 400,000 tons of nickel, then the difference is settled in gold. Yeah, so it's kind of like that is part of the reason for the price of gold to go up. But that's not the only reason. I mean, the evidence I would offer you there is that there's significant central bank buying, but also significant relaxation of the rules of holding gold. The Chinese government have now allowed their insurance companies to hold gold as part of their assets. So where you've got you know financial services firms having to hold assets as an offset against liabilities, well, one of those assets they're now holding is gold, rightly or wrongly. Some would say wrongly that that's a speculative asset, and they've got no business holding gold, but that's what the Chinese government have mandated, and that's what's happening. The Central Bank of China have added 300 tons of gold in 2025. So that's part of it. Part of it as well is the fact that there's a property bust in China. Now, the Chinese have speculated because I'm not saying this as a dig, but there was another commentator that I followed that said, I'm half Chinese, and the Chinese are terrible gamblers. They will always gamble. I think there was a lot of that going on with property, where People were leveraging themselves up to the hilt, taking on, like rich dad, poor dad, taking on lots and lots of mortgages, going into terrible amounts of debt. So the problem with that is that when you get to a deflationary bust, the music stops. It's a bit like if you've watched The Big Short, the what was it, the topless dancer who says, "Well, what do you mean my condo? Like, what about my other 10 condos? What do you mean your other 10 condos? Yeah, yeah. I haven't just taken out one mortgage, I've taken out 11. They said it was fine." Yeah. Like, that's happened again. I don't have any extensive evidence other than, you know, sort of the fact that there is a very serious bust out there. But what I would say is that property is no longer seen as an investable asset. So what do they invest in? Well, gold. Yeah, so gold has, and again, that is with the encouragement and blessing of the Chinese government. They've made gold very available through things like the China Gold Association. So you can see there, 56% increase, 125% increase in ETF. So there's evidence backing that statement up. Some people now talk about having a 60-20-20 allocation rather than a 60-40. 60-40 is dead, 60-20-20. Well, part of that 20 is gold. Now, different people will say different things, but generally, I would say allocation to gold is somewhere between 1% to 2%. Well, the average at the moment across portfolios is 0.7. So that alone, I mean, you consider personal wealth is into, well, US personal wealth alone is 160 trillion. So that alone would add a vast amount of demand. Just that movement back towards 1 to 2%. And when Bloomberg is talking about gold in the morning, the afternoon, at night, I would say there's some degree of that going on, almost certainly, and will continue to do so. So I think those are three of the big reasons. I mean, it's no longer the preserve of gold bugs and gold aficionados, people who kind of said, oh, one day gold will have its day, and so others that were saying, oh well, it's all going to get, it's the barbarous relic replaced by crypto, replaced by this, replaced by that. It's no longer, how wrong were they? How wrong were they? And so yeah, there's yeah, never say never again, because the guy said, oh, we'll never have a crypto winter. It's down 10% since he said that. So whoops. The rise of crypto treasury nonsense in the UK, and those have crashed by 60, 70, 80, 90% since pursuing those strategies. And no, no surprise. And I guess as well, that the whole sort of generational thing as well, that I suppose you've got Gen Zs and millennials that maybe have never, ever, ever had a conversation about owning or investing in gold. They've grown up sort of, oh yeah, crypto this and crypto that. Crypto's ended up maybe now being a bit of a disappointment. I mean, I'm sure there's plenty still out there that don't agree with that statement and are crypto fans. Good luck to you, but I think it'll end in tears. Good luck on your speculation. But gold's been going far longer, and the fact is, when all the bitcoins are mined, how's the Bitcoin system going to carry on? And people say, oh, well, yeah, they'll adapt. Well, how? It's a decentralized system. How will they adapt? Like, how can you adapt a decentralized system where once you remove the incentive to mine, you also remove the incentive to process Bitcoin transactions? It's a Ponzi scheme. It mathematically is nothing other than a Ponzi scheme, because there is no infrastructure except the infrastructure that is being used to mine more coins. And there's also this assumption that because the coins will become more scarce, demand will grow. Well, if you've ever studied economics and you've looked at a demand curve and a supply curve, I mean, yes, as the supply of something increases and that supply is stimulated by higher prices. It's true, but supply is only stimulated by higher prices if there's sufficient demand. Where's the sufficient demand going to come from? I mean, it assumes, that's why I say it's a Ponzi scheme. It assumes that there's more and more and more people willing to pay more and more higher prices for something that has no aesthetic value, that costs you money to store and insure and can be stolen from you and various different things. That, it's not true to say that that it has no cost. That's just simply not the case. Um, Gold has a cost, but you can go back 2,000 years, and once all the bitcoins are mined, well, and once all the ounces of gold are mined, well, like gold doesn't stop existing. Gold, if I've got a gold coin in my hand and the last ounce of gold is mined somewhere out in the world, okay, because one day theoretically that could happen, well, that gold coin is still in my hand. It physically, I've still got it. And if anything, there's no more gold coins being, no, sorry, there's no more gold being mined anywhere in the world. Well, that gold coin that I've got will potentially become more and more valuable because other people will lose their gold coins or have them, uh, the scarcity value has just increased by the last gold coin being mined. The last Bitcoin that's mined, the whole thing shuts off because who's producing the mining that produces the transactions that process the Bitcoin transactions? Like there's a weird catch 22 that nobody's ever been able to explain to me apart from, oh yeah, they'll adapt. What do you mean they'll adapt? Where's, like, you've got this perfect system supposedly. Well, how is it going to adapt, and who's going to pay for the adaptation? That's the other thing. Like, who's going to pay for this adaptation where somebody is going to sort of set up infrastructure to process Bitcoin? Uh, anyway, I won't talk. I didn't mean to talk about Bitcoin. I meant to talk about gold and prospect metals. Debasement. So this is actually, I said the main three. This is actually probably the biggest one, and I've left it to fourth. The fundamental fact is that the Fed balance sheet today, and I haven't gone and done the same calculations on the Bank of England and the other, the European Central Bank, the ECB, and so on. But I'm sure the mathematics are not dissimilar. But the Fed's balance sheet was less than 1 trillion. Okay, back in 2007, the Fed balance sheet was 9 trillion, or 8.97 at its peak. Today it's 6.6 trillion. So the Fed's balance sheet is equal to 22.2% of US GDP today. It's also equivalent to nearly 30% of the US M2 money supply. So when you sort of, I mean, and I've not seen anybody else do this calculation, so maybe I'm barking completely up the wrong tree, and maybe somebody's going to say, "Look, you've completely misunderstood this." But I've studied economics, and I suppose I don't think what I'm coming up with is particularly strange or unusual. But what I'm saying here is that consider that gold relative to money supply magnified by QE and then magnified by inflation is 418% since 2007, and gold since 2007 has gone up by 473%. In other words, uh, the amount that this has gone up and the amount that this has gone up. Now, I didn't sort of think, well, is 2007 a good reference year or a bad reference year? I think it was a reasonably, there wasn't any gold fever in 2007, but I don't think it was a hated commodity either. It was sort of an average in the middle year, I think. Uh, so, for it to go from 418 to 473, or the difference between this and this, I mean, to my mind, when you sort of run the mathematics of all of this, real GDP has gone up by a third, so the economy has grown, money supply is, you know, tripled. Gold has gone up by fivefold. QE has increased the balance sheet sixfold. Inflation has gone up 51%, and obviously that is the CPI, so not the RPI, not the true inflation. So there's Of course, you could argue that inflation itself is a quack statistic, perhaps with some inaccuracy in there. But yeah, if you just sort of take the debasement, like what I've called the debasement index. If you take M2 growth, if you take QE, and you take inflation, I mean, you're pretty much at the point of what gold is. So when people say, gold's gone up too much, well, no, gold has caught back up with what the cost of money is, like relative to the QE, relative to the growth of the money supply, relative to inflation. It's kept pace. It's done nothing more. In the article, I sort of say it's kind of like the top of the iceberg has been revealed, nothing more. Yeah. Um, and then there's other things that I went on to think about. Well, M2, I mean, you've got M1, M2, M3, M4. M2 measures domestic transactions. Okay. It doesn't include euro dollar, which is offshore dollars. It doesn't, which is, significant. Doesn't include physical US dollars abroad. Now I've got US dollars, some US dollars abroad. Uh, and I'm sure potentially a lot of people watching this, if you're in the UK, you've got US dollars because you've been to the US at some point, you had some US dollars, or maybe you're planning a trip to wherever in the world, and the sort of you can either use local currency or you can use US dollars. I mean, I go to countries where that's the case, and I'm sure you've kind of been to countries where, well, either that or euros maybe, but anyway, there's 1 trillion US dollars abroad that are not in the numbers either. So this money supply of 22 trillion could be 40, could be 41. Uh, Deposits, foreign deposits are also not included, 41 and a half. So again, you've got sort of potential for a lot of trillions that are not in that calculation, but could be in that calculation. That's why I say it's the visible part of the iceberg. And then you say, well, M2 is narrow money, it's physical money or money that you can get hold of very quickly. Well, if you actually sort of say, well, what about the stuff that isn't as quick to get hold of, but it's still money? Um, there's an awful lot more of that. Household net worth 160 trillion, financial assets of that 160, 120 trillion, which is 15 times larger or many times larger than that M2 money supply. So the debasement calculation that I've done, as I say, I think it's nothing more than where we've moved in 18 years. It's the level of debasement which is far higher than is captured by inflation. It's far higher than is captured by just growth of the money supply. Um, I th- I would argue that that's the reason we're seeing the increase in the price of gold, multiplied by the moves by China to or by the BRICS nations to use gold as a medium of supply. Um, and then furthermore, you've got to say, well, this is just the US money supply growth and the US inflation. I mean, you've then got money supply growth in Japan, in the EU, in the UK. So you've got combined, I mean, the potential for even more debasement, because it isn't just a debasement of the US, it's a debasement of the world. So 4,400 numerically, is it overvalued at 4,400? I'd argue, well, there's lots of reasons to think that it's moved to like a fair value. So from here, will it go up from here and then go into a speculative bubble? Because now it's being talked about 3 times a day on Bloomberg, and I mean, if you read, I don't know, any of the financial publications, it's now topic du jour. If you go and look at Fresnillo and sort of some of the big stocks, I mean, they are vastly, I mean, they're richly valued. They weren't, they've, like, I can remember talking about Hochschild. I had a Hochschild, Hock on the Block, I remember, was one of my articles, and Hock was at 60p, and I think it hit £4, or certainly sort of been. I think it's gone up 600-700%. So if we went and quickly look at Hock, Hochschild, the 335, there we go, but it hit what, 440 there. And I'm talking about articles where back here where I was saying I'm sure that 60p is incredibly cheap, and even if gold, even if we only see an increase in gold up to 1800, I think was what my article said. And but the upside could be if gold hits to 2000, this is the effect on profit. And of course, and I think what I did was I kind of got out by about here. So I mean, again, I've lost, I sort of got out far too early with Hochschild, but I was happy to get out at, triple my money. I mean, that's great. Like, I'm not going to complain for a minute that I didn't capture the entire upside, because I got to a point where I said, well, I think Hochschild's now looking quite rich and overvalued. And anyway, the reason I like GPM, I have talked around this for far too long, is that I don't think 4,000 or 4,400 is particularly personally, I don't think it's something to be concerned about. I think that there are reasons to think that it will, remain at and around that value. I don't see that we'll, as I say, somebody that wants to bet that gold would return to 1600 somehow, yeah, I'll take that bet because I think that's a good bet to take. I mean, some people say it's just a momentum trade and that it's got caught up, that it has caught up to debasement. I mean, it probably has caught up to debasement. I'd agree with whoever says that. But, um, you know, if it's only caught up to debasement, then there is no momentum. Like, it's a catch up trade, not a momentum trade. Could it carry on and become a momentum trade? Yes. But, this thing where people are saying, oh, well, it's been in the bubble for a while. What? No, no, it hasn't. It really hasn't. And I think that, yeah, I just think that that's bizarre. And I think this, it's dropped because of the reduction in risk. I just don't think that's true. I really do not think that's true. It's because of the potential of a US China trade deal. So what? I really just think that's garbage, and there's no evidence to that. And if there were evidence to that, then when relationships with China deteriorated, we would have seen a rise in the price of gold, but we didn't. Yeah, we saw a rise in the price of gold on the back of, um, well, I would have said on the back of the things that I've discussed. That it was on the back of uh, the the um, the expropriation of Russian assets. It was on the back of Chinese moves to buy gold, and they've been buying gold for a few years. I mean, it's just that the world has not been noticing the purchases of gold. And of course, the other thing that was also the case was that there was somebody buying gold, and it was an unknown actor. It turned out to be the Chinese central bank, so that unknown actor was revealed to be China, but it was suspected to be China. And I remember years ago, I mean, I say years ago, but back when I was saying about Hock being at 60p a share, and like I think gold could go up in the future. It was because there was these signals of buying of gold, and is China buying gold was something that some people were talking about back then. And I think if you go back to my old articles, I might even have said that. I can't remember. Anyway, let's move forward because time's marching on. So the three things that I really like about GPM is that, I mean, it obviously these are sort of 20, 30 shares that they themselves buy, and then the numbers change, and sort of, they're not the same each month. They'll sell off some and buy others. But the theme and the focus is on buying ones where they can drive down the all-in sustaining cost. So as production grows, I mean, you probably know, you have fixed costs. So if you can produce more, than your fixed costs per ton or per ounce of gold drops. So your all-in sustaining cost drops. So that's kind of one of the themes to GPM. It's companies where they're increasing production. Gold's at a high level, could go higher, but it doesn't need to. And I'll show you the mathematics of that. Even at current or even lower prices, the levered profits are not yet in the price. GPM on the cusp of production growth and the commencement of forecasts to go higher, so revenue and profits will rise. So this production growth is another theme that makes me keen on GPM. So look, this is where gold was back at the start of 2025. This is where approximately gold is this evening. I think it's 396 something as I speak. And I'm assuming that gold will be at this price in 2028. Okay. I wouldn't worry too much about that. I mean, that was basically when I wrote the original article, it had gone up from 35 to 48, so it had gone up by 35%. Since then, I mean, I sort of, when I wrote this, I started writing this article, it was at 69, so it had doubled. And this evening, it's at 79, I think it is. So it's more than doubled. It's 130% up. The NAV this evening. The latest one is, I think it's actually dropped from 104 to 98. In fact, I showed it to you at the start of this video. So it's at 98. So it's sort of, still even at 79p, it's at a 20% discount, which, considering it was at a 0% discount, a couple of weeks, a week ago, 10 days ago, 20% discount, I think, is incredibly attractive. I might go and buy some more. Um, anyway, yeah. So that's kind of the first bit. The second bit is, this is the top 10. What I've done, I mean, this isn't sort of vastly scientific, but what this chart is doing is basically, who are the top 10? What's their ticker? Uh, what's the disclosed NAV position? So this is just taken from the latest monthly news update for end of September, which so basically the top 10 make up 48%, and then there's others that we don't know exactly who they are, is the other 51%. That was the share price of those 10 back at the start of the year. That's the share price today. So we can see, some of them have only gone up by 37%. So they're ones where I sort of go, oh, really? This is a producer where they're looking to produce 114 this year, 350 in 3 years' time. That's quite interesting. So like part of this as well is just me sort of going, I wonder whether I should look at buying that directly. Anyway, that's by the by. But yeah, what we're seeing is some have gone up vast amounts, some have gone up by less. Now, I would say that the ones that were in the top 10 that I've had to take out from my last article, which was May, the ones that I took out, I ran the percentage before deleting them, and they were sort of had gone up an awful lot. So GPM do tell us that they've kind of rotated out of ones that have gone up a lot into ones that haven't gone up so much. So Emerald, just to kind of give an example here, Emerald was, I think, well, in this article, was the third largest. So it's now the second largest. So you can sort of see, there we go. Emerald was 7.5. It's now 9. Sorry, no, sorry, it was 7.5. It's now 6.2. Aura Banda is now 9. Oh, sorry, was 9.4. Aura Banda is now 5.5. So look, they've sold off, sort of part of Aura Banda, but pretty sure the Aura Banda price has gone up and then sort of reverted back down. Don't know if we can look that up. I don't know if it'll let us. Banda. Nope. Or a banda, who are they? But yeah, the idea is that they've rotated out of some of the ones that had gone up a lot. So kind of, that makes sense to my mind. That makes sense. But what you see over here is the price earnings today. So this is based upon current price, and it's sort of the trailing. Now, I haven't necessarily done this exactly the same way. I've just taken available information. So if there's a trailing, like last 12 months, 2024, I've used that. If there's sort of like a Q2 or a Q3 number, I might have taken that, multiplied it by 4 to kind of say, like what's the earnings relative to the price. What I've then done is I've said, right, okay, well, that's kind of, and again, this is sort of estimated because this is sort of based upon, at Q2, they've done 57, so I'm doubling it to assume 114. I don't necessarily know that that's going to be the outturn. So some of this is kind of best estimate rather than sort of being utterly scientific. And then this as well, this is sort of like what they're saying that they're going to be able to get to by 2028 in terms of kilo ounces. And again, that might have an element of aspiration rather than, because obviously it's in the future and it's a future facing statement. So, anyway, you kind of get to a point where you see, well, we sort of see that we'll see something like a 50% increase. And and actually, as I'm even looking at this, I notice here I've not filled out new gold, and I should have, because obviously here I've worked out that they're tripling their margin. So I think this number is actually a bit on the low side, and there's a typo there where I should have filled that out and I haven't. Obviously, where I've got sort of explorers, and who knows, like with explorers, I mean, they're still drilling for stuff. They're not, these guys, I mean, they're literally building out their mines. They are sort of constructing or expanding. It's not pie in the sky. It's boots on the ground. Whereas with the explorers, or at least where there wasn't any kind of, I haven't speculated to say, oh, yeah, sure, they'll drill some holes and they'll build a mine and it'll all be great, because that'd just be fantasy world stuff. So I've kind of kept these as question marks, and that's why they're question marks. So I'm not going to sort of put in a number where I sort of think, well, it could easily be zero. Keep it quite realistic. But as I say, this is sort of my best estimate of where it could head, and obviously this could be higher. But we're seeing roughly a 50% increase to volume. At the price of gold at the start of the year, I mean, these companies, again, based on these production levels, their AISC, and then their sort of, that as the average selling price for the year, that's the profit they would have made based upon gold being at 4,000. And again, there might be some element where obviously it hasn't been 4,000 all year. So it's kind of treat this not as the 2025 financial result, but like a 12-month run rate. Maybe I should sort of change the words here to say 12-month run rate from today type thing. So it's sort of a 25/26 estimate. But this is sort of the 12-month run rate. And you can sort of see, this is the sort of beauty of this share. I mean, it's gone up from 35p to, well, at its high point, it was at £1 and 2p. But like relative to its profit earning potential, which is, even just with these volumes, is 4 times. Essentially, I was selling it at 102 with kind of 35p still left on the table, really, according to my own calculation. I mean, that's why I didn't sell 100% of it. I sold, a chunk of it, but not 100% of it. And when it dropped back down, I mean, it dropped down to sort of probably 2 times. But I'm saying, well, hang on a minute, it's at 3.9. Like that number there is 4,000. That number there is 2.6. So, on this continuum, I mean, we're dropping down to what? Something like 4 billion. And that's 4 billion for everybody, not just for GPM. Sorry, just to be clear. I mean, this is sort of the corporate profits if you owned 100% of these companies, and GPM don't own 100% of them. So don't get carried away with that this 100 million market cap's going to somehow generate. I'm not saying that. I'm saying these are the profit margins for the whole, for the all 10 of the whole companies. But yeah, based upon, I mean, this is only based upon 4,000 gold. Like it's only based on 4,000 gold, but based upon these increases, combined with some level of all-in sustaining cost decreases, that's the leverage 3 years from now, if gold stays at the same price. Now, if gold goes up, that number is ridiculously high, and I won't even show it to you. But you can see there's sort of, like today, it's at or around four times what it was at the start of the year. Okay, uh, if you hang on for another 3 years, it'll triple, and that's without gold going up at all. If gold goes up, I mean, it's just, I do see some other people who talk about 100 baggers and things like this, the 100 bagger club or something like this. Uh, I'm not saying it's going to 100 bag or this or that and the other, but these are the numbers. I mean, and obviously there's some crudity to this. I mean, the world's not a perfect place, and maybe they won't hit that production increase from 850 to 1200. Maybe costs will go up, not down. Like I wouldn't say these are nailed on numbers at all, but they are what I would call quantums, where I sort of say to myself, well, there's a risk that it won't go as high as that. But, even if I sort of say, well, there's a 50% chance that it will and a 50% chance that it won't, I can then sort of in my mind say, well, I'm happy to accept, like say 7 billion as the midpoint where I'll say, okay, let's build in a margin of safety. If it hits seven, like like what I did when it hits 102, like, okay, I'll take some off the table. I'm happy to take 7, not 11. I'm not going to be greedy and wait for 11. I'll take some off the table. But if it goes all the way to 11, I'll take more off the table because now I'm at my estimate of fair value. And obviously, over the course of 3 years, that number becomes more refined because as you get closer, you can see what's going on and see the news flow and so on. So anyway, um, in this article, I do talk about, I do, yeah, Moneyball. I do talk about, yeah, and actually, I mean, this is the thing. I suppose, yeah. In fact, I'm probably going to end because we're at 51 minutes. But I suppose just in the same way as if you've watched the film with Brad Pitt in it and Moneyball, and he sort of says to this guy, well, you've got a year left of your career, and let I want to squeeze the most out of your remaining time, and you want to squeeze the most out of your remaining time. So, you know, kind of help me because you're helping yourself, basically. And he buys players that are the sort of, the unloved, oh, this guy's too old, and this guy's got a funny batting style, and this one sort of twists his arm, and this one that like they all had problems. They were all sort of the misfits or whatever. And I don't want to say like the 10 top 10 companies of GPM are misfits. I'm not saying that particularly, but they're not the Fresnios, they're not the Hochschilds, they're not the sort of Barrick Gold, and they're smaller. They're sort of the unknown names, but like when you look at them all, Equinox, you know, they're they're all sort of getting places, increasing their volumes, decreasing their costs, but you're not paying top dollar prices. So I suppose this analogy that I would draw of sort of, in the same way as in baseball, you would look at dollars per on base percentage. I had to look that up. I didn't know that was what you called it, but I could kind of remember it from the film. Statistically, you just say, like, how can I get my batting average? And this is the thing, like this batting average, if it can kind of get to there or somewhere even close to there, you know, it's on a quantum where it's kind of at double where it was relative to it being before. So let's say it's at the 2 billion mark. Um, it's, well, just roughly 50% undervalued today and probably 83% undervalued tomorrow on a balance of, well, moderated by a balance of probabilities, I guess you could say. But whatever your balance of probabilities is, you can run the numbers and say, well, this is sort of relative to other ideas where you would easily pay. What's this one on? Just to sort of show you, right? You're getting a 0.44% dividends. Yes, there. Look, 22 point. Oops, I just clicked away. 22.89. So you're paying 22.89 times earnings versus paying, well, I mean, some of these might be at 22 as well, but there we go. But 10 times, 13 times, 12 times. And some of these, like sometimes price earnings isn't the number to look at because it's a moving target, and once you increase production, once you decrease costs, you know mining is a funny business where it's not a flat. You've got sort of variable costs that can skew your numbers, should we say. But you can sort of see, you've got a lot of value here, and the forward estimates, and these are based on these margins here, forward estimates. I mean, you've got some that are sort of dropping down to 3 times in the next couple of years. Anyway, I'm not going to kind of cover these individual holdings, but they are in the articles, so you kind of get a bit more of a flavour of who you're investing in, and where I'm getting these numbers from. The 2028 number, well, it's that number there. So it's yeah, the idea is to kind of try and surface a little bit of detail, and I sort of conclude by saying, it's yes, it's gone up and it's broken through highs. Of course, there was going to potentially be some consolidation, and yes, don't get giddy, don't get overexcited, but don't get underexcited, don't get emotional about selling, because it's dropped a little way. I think you just got to sort of take a breath and just rationalize, run your own mathematics on sort of where you see these things in the future and relative to today. And if it drops down, and maybe you sort of say, well, should I buy more to average down, if that's if that's what you decide to do. I mean, all of this is your own investment decision. I'm not sort of saying you should do one thing or another, but hopefully this gives you a perspective on why I think gold has increased in price, and therefore, because it's increased of these reasons, the decrease, the debasement of the currency is no, if you believe that that's real, and so much evidence to say that it is, well then, a drop back to 1600 is sort of mathematically impossible, because debasement's already happened. I mean, what are they going to do? QT to the point where it can go back to 1600? It'll never happen. Like, do not expect the government to QT, because it would send the economy into a death spiral, and so it would never happen. Simple as that. So yeah, I think the any talk of the move down to sort of silly levels of the price of gold is just fantasy as far as I can see. And I think 4,000 now will become a kind of an established number, or three something, certainly an established number, because when you look at the degree of debasement, I mean, it's pretty much, as I say, it's not sort of anything other than the tip of the iceberg. Anyway, that's enough from me. Hope that's been useful. If you have enjoyed it, like and subscribe, all that fun stuff. That's always appreciated. And the article will be out in the next couple of days on my Substack, which is theoakbloke.substack.com. And thank you for watching. Hope that's been useful. And look out for more videos in due course. Cheerio for now. Cheerio.